Hey everybody! In this video, we'll review for the second exam, so let's get into it. There's no mini exercise associated with this, but we'll work off of the Exam 2 review outline under slides. And my strategy for preparing for this exam is the same as, it's similar to before. I mean, it's a take-home exam, so focusing on memorizing obviously isn't as important, but some mechanics, right? So I'll post it to Blackboard on Tuesday, March 31st, the date of the exam, under exams. So you'll see it as an assignment under exams on Blackboard, and then your job is to complete the exam electronically and return it, submit it on Blackboard under exams, right, the same place you got it, the following day by 11:59 p.m. Okay, so if you want to type your answers, that's fine. If you want to handwrite them and take pictures of a hard copy, that's fine. Whatever works best for you. Right? And in terms of showing your work, if you want to show it in Excel or write down some calculations and take pictures of those, that's fine. Whatever works best for you is fine with me. Okay? So why don't we take a look at the review outline, and then if you have any questions or if there's anything I can do to help you prepare for the exam, as always, just let me know. I want to make sure you can demonstrate your understanding of these finance concepts effectively. All right, so first of all, some review materials, right? I put the formula sheet that'll be included with the exam here so that you can see it now if you want to under exams. And then also the practice problems with solutions. These are a good way to practice. These will be pretty representative of the kind of quantitative problems you'll see on the exam, right? And then the qualitative questions, the short answer questions, if you've got your notes organized, if you've got access to the textbook, if you've got some resources ready to go, hopefully you can come up with some quality responses to those. So to the review outline, I'd be ready to find a bond's price. You can use the algebraic formulas if you want to, or if you want to use Excel, that's fine too. So the second assignment on bond valuation should be pretty helpful for that. Helpful guide as well as the practice problems, right? We did a problem in class and on the assignment on how bond prices change over time. Okay, so be ready to compute the number of periods, 2 years in the future, for example. And then I'd be ready to do all this with bonds that pay interest either once or twice a year. So remember the adjustments we had to make for semi-annual bonds. If you go back and look at your notes and the second assignment and the practice problems, I think you should be okay there. Great. And then the stock valuation chapter, right? We valued a preferred stock as a perpetuity, just the cash flow divided by the discount rate. Right? Using the dividend valuation model, just be sure to distinguish between D1, right, next year's dividend, and then D0, the dividend that was just paid. And then if you take a look back at the third assignment, I think you shouldn't have too much trouble there. Right? We rearranged the dividend valuation model and solved for the expected return. So we've got examples to follow there, right? We discussed ways of estimating dividend growth. So if you take a look at your notes, you should be fine with that. And then also we looked at relative value using the PE ratio, right? Use the peer group average price earnings ratio, multiply that by your firm's earnings per share, and then you've got an estimate of the stock price based on relative valuation. So I'd be ready to find a stock's price using the dividend valuation model and relative valuation, right? Great, and then the most recent chapter, we saw some graphical evidence that showed that higher risk investments tend to have higher average returns, right? And then we had two different measures of risk that we used. Standard deviation measured total risk, right? That include company unique things, risks, and then also market-wide risks, right? And the key thing, my favorite graph, possibly in the whole course, diversification eliminates company unique risk, remember? So we talked about that. And then our measure of market risk that can't be diversified away, we measured market risk with beta, and then a portfolio beta, right? We could manage market risk by either investing in high beta or low beta stocks. I'd be ready to compute the beta of a portfolio. It's just a weighted average. And there's an example in the practice problems. And then we also use the CAPM to estimate a stock's discount rate, right? So the discount rate that we apply to the stock's cash flows, for example, when we're using R minus G on the dividend valuation model, right? That R usually comes from the CAPM, the capital asset pricing model. It's a function of risk-free return, the market return, and then the stock's market risk, right? Remember, higher market risk, higher beta means more market risk. So, brief overview of an exam review. It's a take-home exam. You'll have some resources, so I'm hoping you find it manageable. If there's anything I can do to help you prepare, let me know. And then also, if there's anything I can do to help during the exam, feel free to contact me if you want anything to clarify anything. All right? Thanks as always for tuning in, and we'll talk to you soon.